I think we had, thank you very much. We had, in the last 2 months of last year, actually quite some recovery of client activity. And if you look at what's happening in the outside world, I think this is an interesting start into 22. All the eyes are on the central banks, obviously, especially on the Fed and what's happening with interest rates and how to tame inflation. I think there's still plenty of political uncertainty to go around. And obviously, there are still the diverging recovery paths from COVID that are ahead of us. So I do believe that 22 is starting in an interesting way, and it may actually be a more active year than some of those who look into the year think right now.
Yeah, Philip, I want to get into that a little bit more because we've seen in the transaction volumes of a day, and when you look at how many stocks are changing hands, it's been incredible and much higher than the normal amount of transactions. And you're hearing from even long-term investors that typically don't meet that often, that meet once a month, now meeting weekly about allocation decisions and a much more dynamic approach from a lot of the big institutions. Does that mean that there will be directly a correlation with client activity this year?
I think in those events, it's very important to advise clients in the right way. And we are talking to our clients very intensively in this phase. And I think while there is a lot of activity out there that is also inviting client activity, there is, as a counterbalance, an element of caution that is needed at this stage in the markets. And maybe not the most aggressive buying of dips before we have seen the first hike by the Fed and how the market is taking that. So I do believe that investors are reacting in a balanced way, but still I think we've started this year in an active manner.
Can you talk to us about yields and the impact on the business? I mean, UBS was fleshing out to investors yesterday if there's a 1% move over the course of the 12 months, how it would bolster profits. But we've also heard some messages from the Fed that maybe it needs to be more aggressive in targeting the balance sheet, which could have that opposite effect, of course, where investors don't stretch for yields out there and some of that activity could actually fall back as investors are somewhat dented in terms of activity. Just piece together for us the direct implications of higher yields globally for your business.
I think it's very simple. Higher yields are in principle beneficial for our business and should be felt throughout the years if they happen. We will see how the yields out there in the market really develop.
Philipp, very good morning to you. You have one of the most enviable price to books of any European bank. Currently, I'm looking at the next 12 months figure on a price to book of 1.8. That said, sir, and I hope you take the question in the spirit it's meant. That said, your shares are still lower now, as I speak, than where they were trading in early 2018. Why has the share price growth appreciation slowed down, do you think, sir, despite the fact that you trade at a lofty valuation?
I tend to look at this in the very long term, and I think we've come out of a long growth phase for a decade, where Julius Baer has been consolidating very successfully in the wealth management industry and grown to scale. We have moved now through a transition phase in the last 2 years where we've built a very solid ground from which to jump moving forward. Actually, a time where a lot of things have happened out there in the market, and we've seen the lowest point of Julius Baer shares in those 2 years during the pandemic, and we've seen the highest trading point during those 2 years. And so I think that should also show the effect of external factors. I'm thinking about the long-term development of our share price, and I'm very confident that with the momentum that we have right now and with the ideas and the growth plans for the coming years, we are going to positively and constructively develop our share price in the years to come.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.